Hey everyone, happy Tuesday. It's your girl, hashtag JLoan in the building. I know you missed me, right? Hopefully so. Well, it's my favorite day of the week and hopefully it has become yours because every Tuesday I bring to you another tip. And what I started doing was taking some of the questions that I either see online or maybe someone asked me, and I try to make a video for you to help you, because if someone else is asking, maybe you feel the same way. And believe it or not, a lot of people don't want to ask questions, either because they think it's dumb or they don't want people all up in their business. And so hopefully I can help you as well, okay? So the question that was asked was, if I make, or if my household income is $65,000 a year, how much can I qualify for? And I always tell borrowers this is a very loaded question, especially if someone wants us to give them that answer without pulling credit, okay? But I understand that credit is it's a sensitive topic, and sometimes people don't want you to pull their credit right away. And so I'm going to give you a very basic knowledge of what's going on in the market, and then kind of help you a little bit with how you can try to figure this out on your own, okay? So $65,000 a year basically equates, if we divide $65,000 by 12, that leaves you with $54.16 a month, okay? So 65K divided by 12 is $54.16 a month, okay? Now, I am gonna say on a great day, let's just say everything about your file is A+ and everything is wonderful, some lenders and some programs will allow you to use 50% of that income. So this is a big hypothetical. Everyone does not qualify for 50% down, and there are programs that do not allow you to go that high, okay? So just for easy purposes, I'm gonna multiply this times 50% or divide it, whatever you wanna say, okay? And that's going to give us $27.08 a month. That what I say is $27.08.33 a month, sorry, a month to play with, okay? Now, when I say play with, if you are a borrower and you don't have any debt, right? You don't have any credit card debt, you don't have student loans, car payments, furniture, you don't have any debt, then typically this is the amount of mortgage that you would be able to qualify for, which is $2,708.33. But I'm not sure if you heard what's going on in the world today. Mostly everybody has some type of credit card debt. And so we have to be realistic that most people have car payments, most people have student loans, and most people have some type of credit card debt, okay? Now, what's important to know is that we don't look at that you owe $20,000 in the credit debt. We look at what is your monthly payment on that debt. So in this situation, if you have no debt, then this is typically what you would qualify on a great day, okay? But if you have debt, then we take this $27.08 a month, okay? And now we start subtracting out debt. So let's just say you have a car payment of $450. You have, that's your car payment. You have multiple credit cards that are $100 a month. And you have one student loan payment of $50 a month, okay? So when we take all of this out of here, this is $600, right? And obviously this is monthly debt. And that would leave you with $2108.33 for a mortgage, okay? Now, I always tell people it's really important to me to not break people's dreams, but to also, on my first initial conversation, to be realistic, right? Because I don't want to set anyone up for a false belief that they can buy a $500,000 home with minimal amount of money down for $2108.33 a month, okay? So what I did is just based on, as you know, because I can't give true rates in a video, I'm going to use somewhere around where rates are today, so hypothetical rate. And I'm going to show you a couple different payments of just principal and interest, because what you see online doesn't always give you the full story of what the total payment is, right? So right now, in our market here in the Dallas-Fort Worth area, I think it would be really hard in this market to find a home under $350, but I am gonna show you one at $250, okay? So $250 at hypothetical 7.25, and that's going to give you $1,535 a month, mortgage payment, principal, and interest. And I put this up here because I can't tell you how many times I pick up the phone and talk to a borrower and their max is $1,200 today. Well, $1,200 today would be really hard when the market is just not yielding that price of home to get you a $1,200 a month payment. Okay, even when the market wasn't like that, to get a $1,200 monthly payment, you probably had to be buying a home at $100,000, and that's just not available in this market today. Okay, now to jump up to a 300K, right, at the same above, that's going to be $1,705. And then just to get to where we are today, right around 350. Oh, I'm sorry, I did this wrong. It's not 1705. Forgive me. I did this whole thing wrong. Ha! Sorry about that. I'm glad I caught myself. At 250, I'm sorry, because I did down to 225. So that's 1705. Now I'm right. Okay, 2047. All right, now my numbers are actually correct. And then again here, you're looking at $23.88 a month, principal and interest. And just in case you want to know, around 400K, same thing, and that leaves you at $27.29 a month. As you guys know, I don't re-record my videos. I love to sometimes make mistakes and catch them because it shows you I'm human, right? I'm gonna make mistakes. So here's your 400K, here's your 350K, which is right around where we are right now. And this is $2,388 a month. That's principal and interest. So keep in mind, you have to add back into that, or add to this. You have to add property taxes. You got to add your homeowner's insurance. And if you're putting less than 20% down on a conventional loan, you're going to have mortgage insurance, which just about everyone in this market is putting minimal down. Okay, so that just to keep you in mind, tax rates here in Texas are anywhere from the lowest I've seen is 2 to maybe 3.5%. So just on a 400K home, that's $8,000 in taxes on the low end. So that just gives you an idea of what you're adding back in, okay? Again, I don't really like people to do this on your own. That's my job, it's my expertise, right? And I like to break it down and show you, and then we can talk about is there more income? Is there anyone we can add to the loan? There's so many different ways that we can try and be creative. But if you wanted to do this on your own, you don't want to pull your credit, there's things that you don't want to do right now, you're just really in the beginning phases, this should really help you a little bit on how we kind of look at it. But again, keep in mind, 50%, that's a very unique file, but typically you want to look somewhere between 43 and 45%. Okay, so I know this is a lot of information, but it's great information. So if you think so, just click the like button, comment, and of course share, because you are not the only one who wants to know this information. I promise you that. I get this off of a forum in which people all around the world are asking questions, just questions that you would think that sometimes people know, like, hey, you don't have to put 20% down anymore. Well, they still are out there, okay? So thank you so much for watching, and until next week, I hope you be safe, be blessed, and have a fantastic rest of your week. Talk to you soon. Bye bye.